Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live, the podcast series. As we move along through the week, please keep in mind the focus, the objective has always been the same with Real Estate Radio Live. I started this show almost nearly 8 years ago, and that is to inform the consumer, to make you, hopefully, help you to be a more wise consumer in and around your real estate transactions. So whether you're buying, selling, refinancing, investing, building, all kinds of different aspects to real estate, we have a great network of people here as part of Real Estate Radio Live, and that's what we'll continue to do. Also have some exciting news. We are going to be back on the radio in the Bay Area live every single day from 3 to 4 Pacific Daylight Time. Super excited to be back on KDOW 1220 AM, the Wall Street Business Network station, where we started over 7 years ago. We took a little hiatus, and podcast has been growing rapidly, but they invited us back to do the radio show, so we're super excited about that. Stay tuned for more information. Again, that could be, you could tune in at 1220, KDOW 1220 AM, and that show will start next week on the 19th, every day from 3 to 4 Pacific Daylight Time. Before we get started and invite my guest in, just a reminder, if I could help you in the way of financing, purchase financing, refinancing, maybe you need a real estate agent, CPA, some financial advice. We have a network of people, professionals here that are really, really good, that I've been working with for nearly 20 years, and they do a great job, and I would be happy to refer them to anybody that is looking for a trusted resource in the real estate field. A couple different ways you can reach me, area code 408-838-9060, or you could always email joe at reradiolive.com. All right, let me invite my guest in, Mr. Tyler Sheff. He is the founder of cashflowguys.com. Tyler, good to have you on the show today.
Hey, Joe. Thanks for having me. I appreciate it.
My pleasure. This is going to be fun, interesting. You know, Tyler, I've said before that the majority of the calls, correspondence, emails, kind of what we get on the show historically over the years have been a genuine interest in investing in real estate. And it's pretty typical. I'll get a call. It kind of goes like this, or an email that says, you know, Joe, love the show. Great information. Do you have any insight, or do you know where we could possibly invest? I want to invest in real estate, but it's so darn expensive in the Bay Area, and you know the cash flow, the numbers don't work. So there's a big interest in just in general. I think all of us would agree in real estate, and then as an extension, investing in real estate. And so to have someone on that's been successful, that has worked hard at it, and showing some great results, we're happy to have you with us today. If you could, Tyler, before we kick off, if you could give the listeners a little bit about your background, kind of where you got started, what your background is, and then your current roles and responsibilities as being the founder of Cashflow Guys today.
Sure, be happy to. I started back in the year 2000 is when I got licensed originally, and that came from, I had a business, a trucking business. It did very well, but I was looking to diversify my streams of income. I know I was raised by a realtor. My mother was a realtor for many, many years. Actually, she still is, believe it or not. And I got my license, but then quickly found myself rather bored with the whole process of being a traditional realtor. So I got into flipping houses, and that took off. We had some roadblocks along the way. We had somebody leave the country with about $250,000 of our money, and that gave us a little bit of a step in the wrong direction backwards, but we recovered. I did take I flipped a ton of houses back then, and I want to breaking off and doing it more on my own instead of with partners. But, you know, there was always something missing with the house flipping thing. It was like, you know, I would bust hump and I would get a house done and I'd go ahead and flip it, and it just didn't seem as gratifying as they make it would sound on television. And, you know, back then, we're going back to 2003, 2004, it wasn't on television. There were no Home and Garden televisions. There were no Flip This House or Flip or Flop or whatever you come up with. None of that existed. So I'm kind of raised to be a bit of a capitalist, and I got a little greedy, and I said, how can I make more money on the flips? Because that was the only thing about it that really excited me. We live in Florida, so here in Florida, it seems like it's always 100 degrees, and there's nothing exciting and sexy about hanging sheetrock in a house that has yet to have its air conditioning installed. So that part was kind of lame, and I decided that if I just simply rented the properties after I flipped them for a year, just 1 year, the value would go up by 25% back then. That was a pre-crash. So that's exactly what I did. Is I had a whole bunch of properties under renovations. As soon as they got renovated, I put tenants in them. They stayed there for a year. My property values went up by 25%, and I liquidated the entire portfolio. Right about 2005 is when I sold off everything, which my timing was impeccable. It wasn't intentional. I can assure you that. I'm not as smart as it sounds. But it was good timing on my part, completely a fluke. It was totally fueled by greed, not by intelligence. And when I sold, I didn't allow for the capital gains tax. As a matter of fact, never even occurred to me, because back then I used to do my own taxes because, I was the smartest guy in the room, right? And I filed a 1040-EZ form, and nowhere in there did it ever ask a question, how many properties have you sold any property this year? Usually people do those type of returns. Back then didn't have property.
Right.
So I did not report my sales. I didn't know I had to. Well, guess what? Title company sent the little, 1099 over to the IRS. And about a year later, I got a very large 5-figure bill from the IRS.
Surprise, surprise.
Yeah. So when I got out of the business after that, made arrangements with the IRS to pay them off in full, and I did. I went and got a real job. I went to work for the government out at sea, which was awesome. It was great. I loved it. I traveled around the world, worked for the National Weather Service on ships, and it was a great, great gig. The problem was, Joe, I was back to my tax issue again. I'm back to paying the tax man. I was making almost $200,000 a year with overtime, and I was giving the tax man 40-50% of that. Yep. So for me, I needed to figure out a different option, and because I liked the money, I just didn't like the bills that came along with the money. So I Google searched how to legally reduce my taxes. Because remember, we've already tried the Tyler Charm.
Right.
That didn't work.
That didn't work.
They don't care how charming I am. They still want their money, and at 18% interest. But so we got basically all roads led to, hey, dummy, stop flipping the houses. Just buy them and hold them forever. Well, that was great, but remember, I'm the guy that I want things yesterday. I don't want to wait 50 years to retire. How do I do this? And I realized single-family houses was not the answer, because I simply could not scale it fast enough to be able to live off the proceeds. So for me, it became multifamily, and that's been how it worked ever since. Now I'm a multifamily guy.
Very good. So you focus on multifamily only. So how does let's just kind of start from the basics, if you will, Tyler, because I love that, and I think most people would suggest the same. No matter where you are, I guess the first question is, if someone's just starting today and they're trying to figure out how in the heck to navigate this, would you recommend that they, let's just say they're here in the Silicon Valley or the Bay Area, would you be one of the ones that recommend typically to look for multifamily outside of the state of California, or a place that was more likely cash flow? What would your thoughts be on that?
Well, I would say that's the path of least resistance. However, it is very possible to buy for cash flow in California, especially if you're in multifamily, depending on how you choose to use the units. In other words, most people think of being a landlord as a long-term scenario. Well, I know a guy that does it very well down in Orange County, and he specializes in short-term rentals. Okay. In other words, serviced apartments. So,
I see.
A full-service type arrangements. They yield a significantly higher return. There's obviously more work with that, but it is a way to generate a positive cash flow, even in California. Okay. So know your market, have a better idea, really understand. I'm guessing you sound, just by talking to you, you're a guy that not only lives life, but you learn from it, and
the education of life, making mistakes, realizing, not trying to duplicate those types of things. Would one of your bits of advice, I hear a lot of, what would you suggest how a person starts educating themselves? it's one thing you had mentioned, you see these shows on TV, or you'll hear these things on the internet, or even on radio shows will say, for $13.95, that's all you need to do this, and this, and you can become a millionaire overnight. And there's all kinds of stuff like that. What would be the piece of advice you'd give people that, again, are trying to start, but they want to really educate themselves, and they realize that there is some necessary steps to take, and, it's not easy to become wealthy overnight by doing nothing?
Well, rule number one is it is not possible to get rich overnight in real estate. It just is not possible. I don't care what they told you on TV. It's simply not possible. Number two, there is no course or coaching program or any type of thing like that that's going to give you all the answers that you need, because the majority of the answers truly live within you. Okay. I believe that. Sounds cliche, but it's true. What we do is not simple, or I would say it's not easy necessarily, but it is simple. In other words, it's going to take, you're going to have to roll up your sleeves, and you're going to have to get your hands dirty, whether that be buried in contracts or buried in contractors. You're going to have to do a lot of work. This is going to consume a lot of your time if you want to be an active investor. So first step is ask yourself, how much time do you have available? And that's a very important commodity people tend to skip over. If you can't dedicate, say, 2-3 hours a day minimum, 7 days a week to your business, so say 14 hours minimum a week to a real estate business, then you should go automatically decide to become a passive investor.
Got it. Okay.
Because anything less than that, you're simply going to fail. I guarantee you're going to fail. And I know there's a course out there somewhere that probably says different. But,
that's a good point.
A whole industry exists just for that.
Yeah, that's a really good point. All right, we're going to take a quick break. This is Joe Kuchera with Real Estate Radio Live. We're talking with Tyler Sheff. He is kind enough to spend some time with us today. He's the founder of Cash Flow Guys, specialist in investing in multi-unit properties. We're just getting into the meats and detail, and we're going to take a quick break. We'll be back with you in just a minute.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Hi, this is Joe Kuchera of Real Estate Radio Live. Thanks for tuning into our podcast. We are your go-to resource for all aspects of real estate, including buying, selling, refinancing, building, and legal and tax advice, and much more. You can subscribe to Real Estate Radio Live podcast on iTunes and Stitcher to listen to an engaging discussion about anything and everything real estate. So make sure you get our app, RE Radio Live, in the iTunes store to follow the show.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live, the podcast series. As we move along through the week, we are in our second segment today. Excited to have the founder of Cash Flow Guys on the show, Mr. Tyler Sheff, kind enough to join us for the podcast, talking about investing in properties, specifically in multi-unit. And first part, we talked a little bit about his success, some of the hard knocks, some of the things he's learned. And now we're going to talk a little bit about kind of the meats and potatoes of how to get into it, how to look at properties, what to look at, how do you know you're getting into a good investment, and some other details. Before we do that, though, Tyler, for those that are listening that may want more information about what you do and how you might be able to help them and guide them, what's the best place for people to reach you?
The best place, bar none, is through my website, cashflowguys.com.
Okay.
Got our videos on there. Our YouTube channel is posted on there. We got all kinds of good stuff. Our podcast, all of it.
Very good. All right, so that's cashflowguys.com. So let's jump back and talk a little bit about the you have the money, you've got a bit of education, you did some due diligence, so now you're out looking for a property, potentially. What are the things that you would look for red flags, green flags. It's whatever you want to, what kind of ever phraseology you want to use. But now someone's out, Tyler, and they're looking. They're ready to go. They're identifying properties. What are some of the things they should be looking for, and what kind of numbers when you're looking to purchase a property? Just the basics.
For me, the first thing I think about is if you truly want a deal, you're going to have to look at what's not for sale. In other words, somebody that has something that's for sale probably has a pretty good idea of what it's worth.
Mm-hmm.
If they've got a real estate agent involved, they definitely have a good idea of what it's worth or what it should be worth. That said, if that person does not have motivation, don't go in there with the mindset of, I'm an investor, therefore I command a discount. Mm-hmm. That doesn't work. That's like going to the car dealership and saying, I'm Henry Ford, I want a free Chevy. It doesn't work that way, unfortunately. As far as what to look for, I use a couple different quick test methods, but for me, I only buy income properties. I'm not a flipper. I'm not a speculator. I know what I'm doing. I make my money when I buy. I always make my money when I buy.
Mm-hmm.
So the key is to buy right. And for me, I use a quick test method of mathematical calculation that's basically, it's similar to cap rate, but it's a lot more accurate because it allows for the debt service, and it also allows for the repairs by most circumstances. So for me, I'll take the the gross monthly income.
Okay.
So let's say it's a house,
okay,
and that house generates $750 a month in rent.
Okay.
And I know those of you listeners in California are going to look at these numbers and go, yeah, never in California, but let's say $750 a month rent. We're going to take that $750 a month. We're going to divide that by 1.5%. So $750 divided by 1.5%. That yield is $50,000 is what it tells us. That's the end result. For me, and this is my criteria, and a lot of people tell me I'm crazy, but I continue to buy apartment buildings using this exact math.
Mm-hmm.
That gives me a result, a strike price. I want to make sure that all my total acquisition cost, all in, is below that number, which in this case would be $50,000. If you do the math, and that's the most important thing to understand as a buyer of investment property, please do all of the math, not just the math that makes you happy. Do all the math.
Right.
And that's the biggest mistake people make is they only do part of the math, or gosh forbid, they listen to the seller or the broker. They wind up buying a property that actually costs them money and doesn't make them money. And unfortunately, sometimes it takes them 6 months to a year to figure that out. Okay.
Very good. So when you say the strike, so when you do that formula, in this case, 750 rent divided by 1.5, 50,000 and a strike. So what does that mean? What does that 50,000 mean to someone looking at a property? How does that
means? Based on that income, that is the absolute most I'm willing to pay for that property.
I see. Okay, I see.
All in.
Got it. So you wouldn't pay any more than $50,000 for that property that's netting $750 rent.
That is correct.
Got it. So you use, in your opinion, you use that same formula, whether it's potentially a $50,000 property or a $750,000 property, or does it depend?
It doesn't matter.
Okay.
This is for property that basically in the B to, let's say, D to B class. Obviously, this wouldn't apply to like a beachfront La Jolla mansion, overlooking the ocean, where
that's true. Right.
$37 million and it's not for rent.
Right.
This is for investment property that generates revenue. In other words, it has to be a revenue generating property. Okay.
Let's talk a little bit about, I think it's a great formula, by the way. Let's talk a little bit about the management of these properties. A lot of people, so they get started, they get one or two rentals or investment properties, and they're feeling pretty good, and maybe they want to pick up some more, and maybe they're geographically not close to them. What's your strategy or thoughts? Do you find local companies that actually monitor, real estate companies that monitor those rentals for you, all in, cover those for you, collect the rent and all that? What's your approach on that?
I do. I believe, as investors or any type of practitioner, there's only so much we can effectively do ourselves and be good at it. And management, for me, is not one of them. I'm good at managing the managers, but I'm not good at managing the tenants because it's not something that I enjoy.
Yeah.
And if I don't enjoy it, I'm not going to be good at it. I'm kind of a big softie. I'll be honest with you. It's much easier to be a tough guy back behind the corner, hiding behind the property manager, which I'm okay to admit that.
No, that's a good point. Well said. I would agree. I think that when you're doing the formula, and especially when geographically and you got other stuff going on, know what you're good at and factor that in, because you could spend so much time doing stuff that A, you're not good at, and B, they're taken away from other, what I would call, I focus a lot on what I call revenue generating opportunities in my business. When I set up a team and an approach, and the fact that if I'm not spending 70 to 80% of my day or my time doing what I do best, which is, networking, relationships, building an opportunity so business comes in the door, what I call revenue generating activities, then something's wrong and it's off kilter. So you're kind of saying the same thing.
Exactly, 100%. Now, for me, getting into one of the biggest hurdles I had was people told me when I first got started in the multifamily space, hey, buddy, you don't have enough experience to buy multifamily. You got to know what you're doing to buy multifamily. I said, okay, so how many properties do I need to have before I know what I'm doing? Nobody could really give me an answer. But what I did try is I found a really good property management company. Somebody that had been in business in one of my markets since the 1940s, and they had a very good reputation. So on my first big deal, I leveraged their experience, which is something most people have never thought of, is I reached out to them and said, hey guys, I want to buy a property. How about instead of bringing you in as just the managers, how about I bring you in as part owner? But I want you guys to vouch for this deal. And if you're part owners in it, then the seller very likely will be more willing to hold financing terms for me.
Interesting.
And my investors will be more excited about the deal because now a proven professional, not just Tyler the new guy, is involved in the transaction. And lo and behold, it worked like a charm, and I've been doing it that way ever since.
Very good. Well, we have about 3 minutes left, and I want to make sure, I know one of the things that people ask all the time, Tyler, I want to pick your brain a little bit in terms of a couple of different things. So, again, investors out today looking, regardless of where they are in the United States, are there certain areas that you like right now? Are there certain cities, counties, areas that you would say, hey, you know what? These are the areas that I would keep my eye on for potential investments for real estate.
I love Memphis, Tennessee because of the infrastructure behind it. But at the same time, most people that are new to investing should hate Memphis, Tennessee unless you're working with an experienced operator. And that city preys on out-of-state inexperienced investors.
Okay. Got it. So be careful. So you're saying it's a great opportunity, but be real careful who you might work with on that.
Absolutely.
Okay. What areas would you say, boy, red flag, I don't know, even though this looks appealing, I would be careful about putting your money into certain areas. Do you have any thoughts about those areas or if they exist?
I would go ahead and give you the same answer, Memphis, Tennessee. Because literally, you could be on the wrong street in Memphis, Tennessee and have a train wreck of an investment.
Wow, really?
It's very, very location dependent in Memphis. But if you're in a great location, if you're in the right location, the path of progress, so to speak, you're going to hit a home run. One other major market I would definitely avoid, major markets would be Detroit and like South Bend, Indiana. When you see a lot of turnkey providers in one city, that should pretty much give you a red flag that something's not right. Okay.
What about, before we duck out too, what about the theory, or you hear a lot, buy around, look at the economy, is it growing, look at jobs, look at the jobs coming in, and then of course the other one that's you've heard a lot over the years is, it's a great guarantee, not a guarantee, but it's always a good thing to buy if it's near, a big college or university or places where people are going to be needing to attend or be in that area.
I lean more towards hospitals and medical facilities. If the college has a medical curriculum, I would agree with you.
Yeah, right.
However, overall, as far as the education goes, I think the colleges are dropping off in attendance.
Yeah, they are. That's true.
Millennials are realizing they don't need to go to college and they can make 7 figures a year without a college degree.
So true.
Everybody gets sick and always needs a doctor, so I would lend to that for places around medical universities. But if it's not near a medical university, seeing some colleges closing up their doors, so I would frankly stay away.
Yeah, that's interesting you say that. I think that trend is starting to change, and I would agree with you. Not only the college experience, but what I'm seeing a lot too, which is now happening at bigger rates, and I think we could see is that more and more students may be doing some of their studies online instead of, the physical classroom, the driving, the parking, the paying for this and paying for that. So yeah, that dynamic's changing for sure.
Absolutely.
Yeah. All right, well, we're out of time. Tyler, this has been really, really good. Great information, good stuff. Maybe we'll have you back in a couple of months. You give us kind of an update on what's going on, or if there's anything that's happening that you think's noteworthy that our listeners may want to, catch up on. Be in touch with us.
That'll work. Thank you very much, Joe.
All right, you're very welcome. Great guest today, Tyler Sheff, with founder of CashflowGuys.com. This is Joe Kuchera with Real Estate Radio Live. Thanks again for tuning in today. Remember, next week we are starting the live radio show again, KDOW 1220 AM. Keep an eye out for more details. You could always go to reradiolive.com. Until next time, take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Subscribe to our podcast. Discover more at reradiolive.com.